Hi, this is Andrew with the Andrew Smith team of eXp Realty, and I just wanted to talk to you guys a little bit today about some common misconceptions that there are in the real estate place, specifically regarding buying a home. And let me give you some background on where this came from. So late last week, we were out to dinner with a fairly large group of people. And during the course of the dinner, the conversation turned to a couple of real estate related items, as it quite often does. There was a question about how's the market, what's going on, etc. But a couple of things about that conversation really struck me, which is what led me to make it the topic of the video this week. And the one couple had mentioned, yeah, we have some friends and, they're in the market for a new home and they'd been out looking, but the rise in interest rates caused them to stop. Rates had gotten too high, number one, which we've talked about that in the past, but we're going to put some perspective to that. Number two was a different couple was telling me that out of state, their son and now wife were looking to buy their first home and they had just signed a new lease because they're waiting to save up some additional money. And they wanted to work on a few things with credit. So with that in mind, there were 4 topics in there which we actually wanted to hit quickly. And those are the topics where I think there's a lot of misconceptions. Hopefully we can clear up a little bit here. Interest rates, credit score, down payment, and rent. So let's look at that for just a second here. So down payments. Most of the time, what we're hearing is that a lot of people assume that you need 20% down in order to buy a home. And the truth is that that's not the case. If we go and we look at the average down payment by a few different buyer types, I think it might surprise you. So out of all buyers, FHA, conventional, first time, repeat, the average down payment's currently running 10%. So for all buyer types. For first time buyers, the average down payment right now is running at about 6%. For repeat buyers, so those that have bought before, have sold a home and are moving into a new one, the average down payment percentage is actually 14%. So in none of the cases is 20% down the predominant down payment. So thinking that you need 20% down to buy a home just isn't true. The other one that goes with that is credit. So I think the idea of how good your credit needs to be in order to buy is also a little bit misguided. So if we look at the average FICO scores for approved loans just in 2019, for all loans, the average FICO is actually 726. If we look specifically at conventional, it's 751. If we look at FHA financing, the average credit score for those is running right now at 675. And those credit scores are actually lower than they were 4 years ago. So the idea that you need high 700s, low 800s credit is just not the case. Down payment doesn't have to be as high. Credit doesn't need to be as good as you might think it does. Now, interest rates. Yes, interest rates spent most of last year going up, especially in the fall, where they reached 4.5%, 4.5%, 6%. And it did cause a lot of people to put the brakes on their home search a little bit. But let's put that into a little bit of a historical perspective and take a look at where rates actually are compared to where they were. If you look at the 1970s as the decade, the average interest rate in the 1970s for mortgages was 8.86%. In the 1980s, it was 12.7%. In the 1990s, when I actually started buying homes, it was 8.12%. In the 2000s, the average interest rate in that decade was 6.29%. The interest rate today is running right around 4.06%. And even at 4.5%, historically the rates are still fantastic. But I understand that rise in rates can impact people, especially if they're looking at their total monthly obligation. But let's look at that in relation to rent, because rents have been going up astronomically fast. much faster than housing has gone up. And there was a recent survey released by Rent.com, and I thought the results were really interesting. Of the property managers that were interviewed, 88% responded that they had actually increased rates on the properties they manage in the past 12 months. So they'd increased the rent in the past 12 months. 53% of the property managers responded that if a property becomes vacant, they will increase the rent before a new tenant goes in. So as we've long said, if you're paying rent, you're paying a mortgage. It's just you're either going to be paying yours or you're paying someone else's. So again, credit score doesn't need to be as high as you think it does. Down payment doesn't need to be as much as you think it does. Rates historically are fantastic, and rents are going to keep going up. So hopefully that puts a little bit of perspective and you can find some value in some of that. If you've got a specific situation you'd like to talk through, go ahead and give us a call, 888-447-9650. One of my team members or myself would be more than happy to talk through your specific situation and see if we can't answer some questions for you. Until next time.